Is China about to kick our butt in artificial intelligence? Is Donald Trump right about what's going on in California with just sending more water down south? Or were there bigger problems that are now potentially the subject of lawsuits, some just straight up nasty? And is it possible that the United Kingdom is the canary of the global economy, with the United Kingdom now on the edge of recession? We've got a lot to talk about, and we'll talk about Meta and their artificial intelligence. We've got a daily wealth update. We've got dad joke of the day. A lot to talk about, including some real estate on today's Meet Kevin Report. News that makes you money. Okay, so first, today we got S&P Global Flash PMI data from both the United States and the United Kingdom. In the United States, our readings missed, and that's probably why the stock market ended slightly red today. It wasn't bad, still obviously holding up at higher levels, but what was inside of this composite that started making people a little bit, dare I say, nervous? Well, one of the things that you saw inside of it was a slowdown in services and composite business activity, enough to pull the entire average with manufacturing down. Now, just in English, if you look at this particular chart here, what you'll find is, look at this slowdown here on the right. It comes right after this enthusiasm that we saw after the election. Now, why is that interesting? Why does any of this having to do with the election matter to anyone? Well, because it's very eerily similar to what's going on in the United Kingdom, except in the United Kingdom, they had their election on July 4th of 2024, which if you think about that, that's 4 months before our election. So in other words, they had an election, then it took about 4 months for data to start going crap. So in other words, things were excited leading up into the election and then afterwards, and about 4 months later, things went to poopy doopies, and now we're at about 3 months in a row of just contracting data in the United Kingdom. Consider this particular chart for a moment, and then I want to show you some of the data that's going on here, and you could really see it and start visualizing it. So first, let's start by looking on screen at this. This right here shows you manufacturing and services employment in the United Kingdom peaking out right around the time of the election. At the same time, while input prices are surging, get a pretty big lag behind in the prices that companies are able to charge. That's a potential sign of weakening pricing power. We've talked about that before. We call it the smaller PP, right? Nobody wants smaller PP, but it basically means while your costs are going up, you're restrained from being able to pass on the higher costs in full. So you take it in the margin. Nobody wants smaller PP and then taking it in the margin. It's just not good. But that's exactly what's happened here in the United Kingdom. In fact, look at this. Here's another chart where we can overlay where the election bump was right here, which is GDP and flash PMIs in the United Kingdom, and how they've fallen down in the months since the election. Now, why does that matter? And what does this have to do with the United States? Well, a lot, because we just had our election in November, and enthusiasm has absolutely gone through the roof, which some have said is starting to prop up manufacturing data, potentially hiring, and just PMI data. But what happens when that starts weakening? Well, to understand what happens when that starts weakening, let's just consider what's going on in the United Kingdom, and then we'll go to the United States. So, in the United Kingdom, we have some numbers that just aren't that beautiful. In fact, the United Kingdom is on the edge of a recession. We have an economy that is quote unquote per S&P Global stalled in 2025, with risks tilted to the downside and an economy that narrowly avoided a recession. They say that optimism has fallen, new orders have fallen, and job losses are now at the highest level since the 2009 financial crisis. You could see these quotes directly on their website. Just go to the S&P Global website, and you could look this up yourself. In fact, you'll end up finding something like this. The flash PMI data for December indicate that the UK economy remained largely stalled, continuing to avoid a recession by a narrow margin, but with risks tilted to the downside. The subdued business activity in January was accompanied by a sustained downbeat business optimism environment about prospects for the year ahead and further worsening of the demand environment as reflected by a steeper reduction in new orders. Not good, not good at all. Pushing employment lower again, barring the job cutting seen in the pandemic, the rate of job losses signaled by PMI reports over the past 2 months is the strongest since the global financial crisis in 2009. So this is obviously not good. This is pretty bad. The United Kingdom is not seeing that election bump last. Now, a lot of people in America say, hey, well, the election in the United Kingdom is very different. They don't have Trump. They don't have the enthusiasm of what we're getting with Make America Great Again. And honest to goodness, I hope that's exactly true. We've seen a lot of new money announced to go into the United States. But it's also worth noting that does not necessarily mean we are going to see that money actually end up flowing into projects in the United States. Consider this for a moment. The U.S. CHIPS Act under Biden authorized $280 billion towards semi-plants. But as of October of 2024, pretty much all of those projects were delayed in environmental reviews. Now, some of those environmental restrictions have been lifted as of October of 2024, but it's been like 2 years and there's been no progress. Things tend to move very, very slowly with this building. Now, again, hopefully things will be different under Trump, but this is where we should think about Donald Trump for a moment and go, okay, well, what happened in 2016? Well, here's an example. During his first term, Donald Trump worked with Foxconn, that Chinese manufacturing company that basically makes your iPhone or assembles it or whatever, right? Designed in California, assembled in China, right? Anyway, Foxconn promised to build a $10 billion factory in Wisconsin, which Donald Trump then touted as part of his plan to revive U.S. manufacturing. Basically, people are like, yay! And this is, Market Watch put a good piece together on this, and they're like, hey, this is Donald Trump going, we got a huge $10 billion plant coming. So what ended up happening? Well, as of 2021, Foxconn ended up only investing $672 million, and instead of hiring 13,000 people, they only hired 1,454 people. Now, the company employs only about 1,000, so it's even shrunk since then. So this has a lot of people wondering, okay, wait a minute, that's cool. We can announce all these projects and all this enthusiasm coming off of an election. But at some point, you're going to get to where you've got to look at the market and say, hey, we need this to actually turn into reality rather than just hope or expectations, which the market is by no means short of expectations or hope right now. Consider the following. Goldman Sachs, which sector will perform the best in 2025? 42% say technology, up from 31% last year. And which region will perform the best? 58% say the United States, up from 32% last year, and 32% the year, or 18% the year before that, and 32% the year before that. These are record high levels of enthusiasm for investing in the United States and investing in U.S. technology. But enthusiasm usually comes before reality, and that the spending we're doing has to actually materialize. And if you look at the United Kingdom, it's kind of a warning sign that just because you have an enthusiastic election does not actually end up meaning you end up getting a strong economy. We've now had the third consecutive month of contraction in manufacturing in the United Kingdom. Their service sector only grew slightly. Consumer-facing providers were frankly the weakest out of all of them, which isn't great. It just means your consumer sector is really suffering. And growth momentum has, quote, been lost since the robust expansion of the summer of last year, going into the election. Now, maybe corporate insiders could give us a little bit of a heads up of what to expect in America. Oh, wait, never mind. Per Bloomberg Intelligence, corporate insiders are buying at a ratio of 0.22 to the level at which they're selling, which means you basically have 5 sellers or $5 being sold for every $1 being bought by corporate insiders. And then you look back at that first chart I showed you, which was the S&P flash PMI chart for the United States. Remember this one right here? Look at this. Yes, it's a volatile measure, but notice what you see. A peak out after the election and all of a sudden a decline. The question is, will this decline just continue to be sort of a regular volatile movement here? Or are we going to get the plummet like what the United Kingdom has gotten after their election? I hope not, because this deteriorating more would be very bad. In fact, this is how today's PMI went, and again, why markets were red today. The composite read came in at just 52.4. We were expecting 55.6. Services missed at 52.8. We were expecting 56.5. Now, S&P is like, oh, okay, well, we've just gone to a moderate pace of expansion. Yeah, that's cool, but the numbers totally missed. Manufacturing beat, but at 50.1, so like a hair into the expansion territory. That's like very, very basic and generic. Now, there's also this argument that inflationary pressures intensified on the input cost side, much like in the United Kingdom. But you're not seeing that full dose getting passed on to consumers because, like I've said, you really can't do that. You just can't pull it off in this environment. Now, what is interesting is that inventories fell at the steepest rate in the last 17 months. Now, usually when inventories start falling like that, you end up wondering, okay, why your business is not building up their inventories. Well, S&P Global says it's because companies are just going through some of the existing product that they have. So imagine you're a manufacturer of, porcelain bowls or porcelain cups, okay? So you've got, racks of ink and racks of molds and racks of, clay or porcelain or whatever this stuff is made out of, right? Great. So you start using that up more, but not rebuilding your inventory is sending a little bit of a signal that while businesses might be really optimistic right now and they're trying to use the stuff they have, they're basically being a little bit more, dare I say, frugal. They're like, before we go buy some more supplies, why don't we just blow through what we have first and see how the economy goes for the first few months of the year? And look, you can't really blame that. There's a lot of optimism, but it's a good idea to be frugal as well. I think the optimism is actually quite insane right now. And I'm not saying it's a bad thing. Again, I want the economy to do well because it's great for startups. I threw this page away because I read it. I'm like, okay. But maybe they're right. This here has a forecast of a probability of recession according to economic forecasters. Right, because we trust the economic forecasters. But anyway, probability of recession from the economic forecasters here sits at just 22% in 2025. And I don't blame them because there's so much enthusiasm right now. How could you possibly make the argument that there's going to be a recession this year? Hey, maybe it would be stupid to make that argument. You can see that there at the bottom. But the point is, nobody seems to be preparing for the potential downside with the exception of businesses, which are starting to go, let's start using some of our supplies. Look at what happened to the United Kingdom, okay? They had election euphoria, and then it went to poopy-doopy. It's not good. We were talking about that with course members this morning in the course member live stream. We're like, pay attention to this. We're not saying it's a problem today. We're just saying what the facts are and what the data is, and then, of course, trying to provide, some tools for us to learn from this. That's always the goal. I spend hours every single day trying to put this together. I apologize, by the way, for being absent this morning. Jack woke me up at 2 a.m. vomiting. He ended up vomiting like 7 to 8 times. It just screwed up the whole morning. And then I finally fell asleep again, but then I didn't wake up until later. So I'm like short on sleep, but I also woke up late because it was just a disaster, okay? I'm almost done with the 32nd year of life, so don't worry. Everything should be just fine by Tuesday when I'm 33 and I'm out of this odd year, even year. I'm out of 32. Okay, anyway, very interesting. Now, too bad that's not it for the news today, because now apparently we have to worry about the Chinese. Okay, so the CEO of Scale AI argues that DeepSeek, which is the Chinese AI company, has 50,000 illegal H100 chips. And The Economist is arguing that Chinese LLMs are actually, while they're not the best, they're far cheaper to make than American LLMs, and they're actually only considered to be about 3 months behind United States versions, which is insane because they've recently argued that they've basically been able to get to 7th place in LLMs with just $56 million of spend. This has a lot of people going, oh my gosh, the United States is spending like $56 billion on artificial intelligence over like a 3 to 6 month period. And then we do that over and over and over again. In fact, this dude on X put together a great piece. His name's the Short Bear. I don't know. It sounds like he's a bear that is short rather than maybe a bear that is short in stature. But anyway, take a look at this. US-based AI companies alone will have to generate about $600 billion a year in revenue to pay for their AI hardware, according to Sequoia. The CapEx and R&D will likely be accepted to remain competitive, given the risks of not being involved in the space, like Meta announcing today, oh, we're going to invest up to $65 billion, up from the 51 we promised earlier on more CapEx. Well, remember what happened the last time Meta did this? The last time Meta did this, it was on the metaverse, and they were blowing so much money on the metaverse until they got punished and their stock went down into the $90 range, which was crazy. Now, oh no, Meta's spending more money on AI. We like AI. Stock goes up to all-time highs. But where's the ROI? And that's what a lot of investors are kind of like, I don't know. But if the Chinese can create a better product than we can, maybe we need to be nervous. In fact, The Economist argues that China already has the reasoning style AI, like OpenAI has the O1 product, which basically just takes the answer and throws it back into the machine, and it's almost as if it talks to itself. It's just sort of like emulating human reason. Like, okay, I think this is the answer. Now let me read it again. Do I agree that that is the answer? Well, I could add a little more context to this, blah, blah, whatever, right? Okay, cool. So China's already doing that. And so The Economist fears that China could actually end up with some sort of super intelligence breakthrough and end up giving China some kind of massive lead over the United States. And at that point, do we really have to be worried about frickin' TikTok? The Economist is freaking out about it. They're like, y'all worried about TikTok? Do y'all realize what we're up against here? What we're actually up against? This is crazy. Anyway, this gets interesting. But what'll also get really interesting is this note that's circulating from Meta. Now, I don't have a way of verifying this, so that this could be totally false. But it is very interesting, and I'm excited to talk more about it in the course member lectures. I'm going to pull it up in just a second. I still have not gotten around to updating the video on the Meet Kevin website, pitching how great the Trumponomics course is, because a lot of content has already released. New content is in production. The price of the course will probably be about double within the next 6 months as actual more Trump content comes out. We've got a lot of Trump content in there already filmed at the end of last year. But if you want to join it, go to meetkevin.com, check it out. You get lifetime access to the course member live streams. We had a course member live this morning. We're starting a trading channel with options trading alerts. All of that is starting February 1st. And so we'll have options trading alerts, as well as those will be bought options, sold options, stocks, you name it. So it's going to be really fun. We've got some really cool things coming, so buckle up for that. I just need to get the marketing video done. But by the time I do, I feel like I should raise the price, It's like, well, the marketing's perfect, then we're going to have a higher price. Anyway, let's get into that Meta letter. So take this out here. It started, so this is looks like it's some sort of Meta post somewhere. It started with DeepSeek version 3, which rendered the Llama 4 from Facebook, from Meta, already behind in benchmarks. Adding insult to injury was the unknown Chinese company with $5.5 million of a training budget. Engineers are moving frantically to dissect DeepSeek and copy anything and everything we can learn from it. I'm not even exaggerating. Management is worrying about justifying the massive cost of Gen AI. How would they face leadership when every single leader of Gen AI is making more than what it cost to train DeepSeek entirely? In other words, like the CEOs are making more money than what DeepSeek took to train their entire AI. Oh, and then we have dozens of such leaders. Oopsies. DeepSeek R1 made him even more scared. I can't reveal confidential information, but it'll soon be public anyway. It should have been an engineering-focused small organization, but a bunch of people want to join the impact group and artificially inflate hiring in the org. Everybody loses. Okay, so I think what's happening here is something that I've been warning about probably for about a year now, which is eventually these things are just going to become commoditized. Like there's nobody, like everybody's going to have this on their phone, on their computer or whatever. It's like, cool, you have a really good encyclopedia. Great. Absolutely fantastic. You've got an encyclopedia. Speaking of encyclopedia, this is just like convenient timing. Look who's here with Gavin Gruesome.
Some of the people from the area. I appreciate the governor coming out and meeting me, Kevin.
Oh.
Thank you very much. And we'll be talking a little bit. We want to get it fixed. We want to get the problem fixed. And there'll be some ways, but it's like you got hit by a bomb.
This is just awkward. Anyway, so such a distraction, Kevin. It was like, geez, that's almost as distracting as you pitching your freaking coupon code. Sorry, guys. It's just like, I actually, I've been doing course member live streams since like 2017, and I actually think they're really good. Like we go into some really good fundamental analysis and thought, and sometimes they contribute to the trade alerts and the options alerts, and there's some really good stuff there. So we're really excited about it. You pay once, you get lifetime access to them. Got to raise the price. We're probably going to do a birthday coupon code at a higher price. So anyway, I give you a heads up. So you can get in before that. Email us if you have questions or want to bundle up at staff@mekevin.com. Okay, so this LLM fear is obviously a big deal. A lot of people are freaking out about this, but I don't think it's very well known that these are going to be commodities. Every computer, every iPad, every phone, everything, basically, your car or whatever, everybody's going to have a really glorious encyclopedia. Okay, congratulations. What good does that do you? Well, it's the same good that it's been doing since the beginning of 2023. Okay, cool. What's next? Oh, they're going to be agents? Okay, yeah, sure. Maybe they can go through a checklist. That's not really predictive. It's just a bot going through a checklist. Is that really revolutionary? Does that justify, hundreds, $500 billion of money going into just basically supporting OpenAI? I don't think so, but, whatever. So as far as the, Stargate drama, Oracle still doing well, there's still ARM enthusiasm, but people also say that you might get this sort of promise of $500 billion over the next 5 years, and it ends up being a fraction of that in actual spending. Speaking of actual spending, Marco Rubio has ordered a halt to virtually all existing foreign aid programs pending a review that each dollar spent actually benefits the United States. They say every dollar we spend, every program we fund, and every policy we pursue must be justified with the answer to 3 simple questions. Does it make America safer? Does it make America stronger? And does it make America more prosperous? Damn, that was hot. I freaking love that. I love that almost as much as this next sponsor, which it's all paragraphed down below. So if you don't care about the sponsor, you can always skip ahead. But they're doing some cool stuff. I think it's cool, especially before the big game. So here, check it out in the link below and use my link for that paid sponsor down below. Hey, y'all know I love asymmetric trades where the payoff could be larger than what you're trading. Well, Crypto.com is now offering a sports trading opportunity where you can trade $26. If you lose, your payout is $0. If you win, your payout is $100. Sounds like an asymmetric bet so far, right? After all you have to do is bet yes or no. And that's because Crypto.com is running a promotion for their sports trading opportunities. So if you take a look at their website here, zoom out a little bit, you could trade your predictions. So if you believe a certain team is going to win or lose, whether it's in college football or pro football, bowl games, you name it, in all 50 states, you can make that trade. It costs you $26 per contract. There are fees that are sometimes up to $1.99 per one of these contracts. But if you're correct, the payout is $100. Sounds like an asymmetric trade to me. And if you want to learn more, use my link in the description down below because you'll get a bonus $10 towards your first trade. Well, It's technically after your first trade, but you know me, we always like to net these things out. So you can get started in a few simple steps. Click the link down below, create an account at crypto.com, trade contracts, and get your payment, usually within 1 business day after you win, should you win. Now, keep in mind, this is a form of commodities trading. This means that, yes, trading involves a risk and may not be appropriate for everybody. And you should consider whether this is appropriate or suitable for you. And remember that Crypto.com is sponsoring this video. I just think the promotion is actually pretty good. Again, I'm looking at it like, maybe this is going to be what finally gets Kevin into sports, taking what I love, trading, and bringing sports to it. Let's go. Again, check it out. Use my link down below for that extra $10. Keep in mind, they've also got a big Bitcoin contest going. It's a $100,000 contest where basically the top 10 sports traders will win $10,000 in Bitcoin each between now and 2 a.m. on Super Bowl Sunday. So this is a contest you're automatically entered into once you activate your USD Cash account, enable derivatives, trading contracts, right? And trade at least 1 sports contract before 2 a.m. on Super Bowl Sunday. Check it out via my link down below. Now, the Marco Rubio aid restriction does exempt Israel, Egypt, and foreign aid. Also, there are now reports that multiple agencies are kind of freaking out a little bit because of the hiring freeze that's going on in America, especially mostly amongst the federal government, which makes you wonder about the PMI data we were talking about earlier. But the hiring freezes that are set are expected to last for 90 days, except for the Internal Revenue Service. They're actually going to have to get Treasury permission to hire again. And the FDA is unsure if they're currently allowed to even issue critical safety alerts. Health agencies are apparently not communicating via external communications because, and the transportation system is shutting down for new projects, mostly because everybody's trying to calibrate around like, what are we allowed to do? What are we allowed to say? Things are a little bit up in the air right now, but honestly, that does happen every presidential administration, so maybe it's not that big of a deal. And one thing that is interesting is Donald Trump's been busy. Look at this. Executive orders in the first 100 days. Donald Trump has exploded. He's taken the record for Obama, Trump 1, and Biden. I mean, he's almost done as many executive orders in the first 4 days as he did in the first 100 days the last time he was president. Crazy amount of executive orders. Some people say it's just designed to sort of signal, be a messaging signal. Other people say it's designed to overwhelm the courts. I don't know. But what I do know is we just hit the lowest level of home sales since 1995, thanks to high mortgage rates. And everyone's basically like, this doesn't feel good for the real estate market, although prices have been holding up. The only market that really seems to be booming after the Trump election is the luxury market. Kind of crazy. In fact, Househack had an option on a luxury deal that we'll end up renting out for a good cap rate, but had it's a spec deal build, and we had the option on it before the election, and after the election, luxury markets across the United States have just been selling out at record prices because everybody's like, yes, Trump won, and they're spending. It's crazy. So Househack, I think, Househack probably got a multi-million-dollar wedge there, substantial multi-million-dollar wedge. It's kind of cool. But anyway, Donald Trump is, as you saw in California today, a lot of drama going around or circulating around Donald Trump saying that too much water is just running off California and evaporating. Donald Trump says the water is coming from Canada and it's just getting diverted to the ocean. I think he kind of made an oopsie there, given that Canada is not directly above California. We got a couple states in between. But I think what he's referring to is the fact that if you just look at our Sierra Nevada mountain range in California, 4.9 to 6.5 trillion gallons of water run out into the ocean every single year from the Sierra Nevada mountain range. Now, yes, some of the water that flows down into the Sacramento-San Joaquin Delta, where the Delta Smelt are, and Househack owns property around there, some of that water ends up getting pumped down to the south to fill up reservoirs. But our reservoirs were decently filled up in SoCal, with the exception of probably the most important one, the Santa Ynez Reservoir. And that's where we start getting into some of the real big problems that we have. The big problems are California is in a place where you're just not actually handling basic need infrastructure projects the way you should. And it's absolutely embarrassing that we have a California government that is so inept and incompetent. It's kind of, dare I say, disgraceful. But the way to look at it is the LA Times put together a fantastic piece, and what they basically said is, hey, look, California is in a situation where they could have spent $57 million fighting and actually upgrading infrastructure in Los Angeles. Except what did they do instead? They didn't. And because they didn't, because they were caught up in other priorities or whatever else, California ended up now suffering what's going to end up costing $50+ billion. These are some pretty good pieces. I'll show you a few quotes of them right here. I think they're actually very incredible. So let's see here. There's also a lawsuit going on now from some of the celebrities who have just absolutely lost their homes and their livelihoods, or at least their setups. It's really just embarrassing what's happened in California. But anyway, let's expand this here so you can see this a little easier here. Here's a lawsuit: Spencer Pratt and Heidi Montag suing LAPD. LADWP, that's the City of Los Angeles and the Department of Water and Power. But some of the charts that I wanted to show you right here: red tape, budget shortfalls, and government inaction repeatedly stymied plans for water system improvements in parts of Malibu and Topanga Canyon. High priority items, including those that were listed as high priority fire-related items, were compelling city officials to act since 2013, and they just weren't done. There were plans to build new collections from water systems or from reservoirs, or to fix the Santa Ynez water basin, the reservoir. And guess what? You just never got it done. And this is really what's embarrassing, because you look at California, it's like, for a state that taxes this much, how do you fail so badly at actually maintaining your basic infrastructure in Los Angeles? So the LA Times, I'll show you a little bit more from this piece because I think it's so fascinating. But the LA Times really says that you could have spent maybe 7 years from 2013 actually going through piece by piece, fixing leaky pipes, leaky pumps, and repairing the issues that ultimately contributed to this fire getting out of control. More fire staff, more fire protection. Every element that was basically screwed for this fire. But it wasn't done because the politicians really just failed Californians. And I highly blame the politicians, because ultimately they're the ones that we put in charge of spending on our behalf to make sure that we're safe. Now, the politicians end up going as far as trying to blame individuals who reside in like Malibu or other parts of California. And what they're trying to do is they're essentially saying, hey, whoa, y'all complained that you didn't want higher water prices. So because you didn't want higher water prices, we didn't end up doing any of those infrastructure projects we talked about. And this is where people are like, what's your freaking problem? Like, maybe if y'all could tell us, hey, like, we need to upgrade our fire systems because our water systems are absolutely failing, well, then maybe people might vote a little differently. I kid you not. You can see it here. Look at this. A lack of progress on many of the plans has been driven in part by residents' opposition to potential increases to their water rates. This is literally finger pointing by the politicians saying, oh, well, people in Malibu are not pro-development. Bro, maybe they're not pro-development because the city's planning commission takes forever to actually approve projects. I mean, you try to get a project approved over there. Look at this. The estimated cost for fire flow needs was just $57 million, and construction would have taken 7 years. They would have built new tanks, fixed the aging and severely deteriorated other tanks or systems or whatever. And what, now we're spending 1,000x that. Billions more. It's insane. I don't know, it's just mind-blowing to me, the incompetence. These are literally politicians who on their desks have, hey, here's serious problems. These serious problems could get out of hand and could cause billions of dollars in fire damage. Hey, maybe if y'all fix it, you won't end up with those problems. What do you think about fixing it? Oh, yeah, no, not interested. Oops. I don't get it. I just don't get it. Now, then you get to this drama about the Delta smelt. You know, I'm a big believer that if there's so much drama about certain species, why aren't we trying to build new habitats for those species? Like, humans are here. We build things. So, yes, wildlife is going to move and get relocated, but that doesn't mean they have to go extinct. I'm sure we can find a new home for the Delta smelt. I don't know. It sounds a little ludicrous to me, but then again, you know, it also sounds ludicrous to me that it takes 30 minutes for firefighters to respond to a burn scar where you know there's potentially still smoldering fire after the fire at the set off by fireworks above the Palisades. And it takes 30 minutes for firefighters to respond to it on the morning of the Palisades fire when it reignites. You see, that to me is ludicrous. I mean, politicians should be getting fired for this. It's bad. Donald Trump suggested with Hannity that maybe what we need to do is get rid of FEMA entirely and just have states solve their own problems. And the federal government is willing to contribute to the funding for these. But ultimately, states might be able to establish how to solve their problems themselves in the best manner. You've apparently now also, on sort of some micro news here, got X, so Elon Musk's X, having about $3 billion of debt go up for sale at a discount of 90 to 95 cents on the dollar. So this is bank-held debt that X owes. And there's some hope that they can actually sell this debt at just a 5 to 10 cent discount now because there's enthusiasm around Musk, and given his ties to Trump, maybe this is opportune for people to buy into this debt. But it's worth noting that this month, Elon Musk mentioned, hey, look, we're growing in influence and power. X is doing great, but our finances are still problematic. Oops. Anyway, American Express spent a little bit more money on their marketing, up 31% year over year. That led the stock to actually fall after earnings, even though growth was still moving along. We do have to end up hitting now our dad joke and daily wealth, so let's hit it. Let's first hit the dad joke. Do you stir your coffee with your right hand? Well, if you do, you should consider using a spoon next time. Yeah, I know, not funny. So, daily wealth. Well, today what I'd like to talk about is, it is so great when you have finally completed chaos. And I just want you to try it. We've talked about chaos theory so many times before. Go start with one drawer. Just open up like one drawer of your desk right now, or do your side dresser, a drawer in your car, or your center console, or closet, or whatever. Dump it all out. Just reorganize that one drawer. And the feeling you get when you're done, every time you go open that drawer the next time, it's sort of like what we've got in the office now, which is so exciting. It's like 96, 97% complete now. Every time I come in, there's like this new enthusiasm to work or to use the functions of why you had that drawer, so to speak, in the first place. But I want you to take a moment and think, how can I bask in the joy of the chaos theory that I've performed and the successes that have come out of it? So that's the tip for today. Anyway, thank you so much for watching, folks. We'll see you in the next one. Goodbye and good luck. And start using that spoon. Go to meetkevin.com, by the way. Get in before we bump those prices up there on the Trumponomics group. Got to get that new marketing video up. I've been too busy. All right, folks, we'll see you soon. Bye.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.